All right, welcome to Trendy Options. Today we're going to be talking about the trendy edges. Everybody wants to know what the trendy edges are. And so I'm going to tell you what they are, how they align with supply and demand. Then I'm going to give you the colors of the edges, the acronyms that we use, and then most importantly, how we trade them. So what are the edges? Well, the edges, simply put, are lines that are on my screen. They're different colors. We have the blue ones, which are your yearly, your pink ones, which are monthly, and the yellow, which is weekly. Now I'll tell you, the blue are your higher time frame edges, okay? And in the room, we call these YE, you guessed it, for the yearly edge. And for these pink ones here, we call these ME for monthly edge. And of course, the yellow, you guessed it, weekly edge, and we name these WE for weekly edge. Now all edges have a top and a bottom, and you can see that here. There's a top here and a bottom here. On the monthly, just underneath this cloud, you can see that's a top and that's a bottom. On the weekly, there's your top and there's your bottom. So again, these are the yearly, monthly, and weekly. They are on your screen, they are stationary, and they do not move. So how do they align with supply and demand? Well, let's talk a little bit about supply and demand really quick. Easily put, when we have supply, we've run out of orders, we look to go back to where we found buyers. And that's called demand, where the buyers are. Remember, demand, this is where people want to buy something. Supply, we have an overabundance, we need to go back, we need to find where those buyers are, so we tend to reject at supply zones. Supply is always above price, and demand is always below price. So I want you to look at these and say, okay, the upper edge in this case can be, and let's make this red, and we're going to say this is supply. And down here, where traders want to get into a trade, we're going to call this demand. So whether we're talking about the YE, the monthly, or the weekly, you can assume in this case that we are approaching supply when we're going to the upper edges, and we are approaching demand when we come down to the bottom edges. So let's talk about that. What does that mean? That means when price is moving into demand, this is where people want to buy, we look to take the trade to the upside, as you can see there. And when price reaches supply, we look to get short off of the upper edge. So this is what we look for in this case. Now, really quick, now that we've done that, let's talk about supply and demand and formations. Because the formations are very difficult for some traders to identify, this is why I came up with the trendy edges. The edges are already on the screen, and from past performance from ranges, and they're already there for you to identify high probability trades that are run around supply and demand. In this case, I'm going to go ahead and show you what supply and demand looks like in this very stock here, NTES. If I were looking for demand, I would tell you that we have a demand zone right in here. Okay, and on the supply side, we have some supply right in here. As you can see, the monthlies are aligned with our demand, and the monthly upper is aligned with supply. Demand, supply. Price comes into demand, we look to go bid and go long. Price into supply, we look to get short, and so forth. Okay, now that we went over the colors and the names, how do we really in detail trade these? Well, when price gets there, we don't necessarily just take a trade because it touches the edge. This is the biggest no-no when trading the edges. What I mean by that, do you see the little wick in here? And I'm going to go ahead and take these boxes off. And you can see when I view, we have this wick, or I like to call this a flush low. Okay. We take the trade on a reclaim, meaning when prices went below the edge, we know that it's aligned with demand, so we expect buyers to come in. But you and I don't know when that happens. Time is always the variable when trading, so we must be patient. We look for price to reclaim. That would be this little guy right here above the candle. And we look for higher highs, okay? Whether you want to wait for a higher high above here, a higher high above this candle, that's going to be up to you. We talk about money management and also what our stops look like in our first video called money management. Once we take to the trade to the upside, we also use past edges to become our target. Well, what do you mean by that, John? Let me go ahead and show you. So once we move out of here, this is our support. We look to take the trade to the upside. We're always looking for past or present edges. There's one, there's two, and as you can see, there's one here. So if I were to draw you a line, you would see we got these as targets. Okay, 1, 2, target 3, and down. This is how we use the edges. Now, let's just show you really quick on a white screen what this looks like. Let's do pink, and if you remember, it is the monthly edge. If we're using the higher time frame edges, we want to be using a higher time frame candle, right? I would say no less than probably a 2-hour, maybe even an hour. And what we're looking for, let's just go over this scenario. Say we have a candle that breaks the edge. Do we go long yet? No. We look for price to come back up or reclaim this. This would be considered a base candle. On the higher high, whether it's the base here or above this candle, is up to you. You can even take the trade on the reclaim. What I'm looking for in most cases is a higher high, and then I like to use a stop underneath the edge. And as I said, I'm looking for past edges as targets because we know those were previous supply targets in this case. Once price comes up into the edge, what do? This is where we trim and we become very cautious in the long trade that we're set up. Can price go through? Yes, it can. Once it goes through, it's the reverse of this. We're looking for a base. And actually, it's the same. We're looking for a higher high to continue in the trade. If we fail to make the higher high, and this candle indeed actually turns into a red candle, and we make a lower low, then the position is closed in most cases. And this gives you a short signal with a stop here and ride this down into your other targets. And again, we show you how to find targets on all these in our targets video. So whether it's a monthly, it's a yearly, or a weekly, we're using the same setup in all cases. Now, how did and why are they derived from here? Basically, like I said, when going to school, I found it to be very time intense. You know, I spent too much time trying to find the overall, these candle structures and so forth. So basically, the best thing you can do is always learn about range, right? So what I mean by that is a pivot high to a pivot low is a range, okay? And they look like this, okay? And I know it looks simple, but if you're new to trading, it's not really that easy to identify sometimes, okay? And I would encourage you to practice finding ranges, because even myself, I have a hard time sometimes, okay? And you can see here, when we do this, we find that supply and demand, after studying, came within a certain period in these ranges. And I find that it happened like this since the inception of the market. What do I mean by inception? Since candles first were coming on the screens, we've gone back and back tested these, and we find that price reverses in these areas of the edges. So where did the edges come from? They come from ranges. They come from different time frames. They come from past time frames. All edges to the left, meaning from current price, these would be current, okay? So these here, this box right here, these two pink are the current MEs. These yellow lines here are the current WEs, and the blue are the current YEs, or yearly edges. You can always go back and we can look to see how price reacts off of the yearlies. And you will see even in this tutorial from 2003, we look for the edge to be support. And when we make the higher high, we look to go long. On the yearlies, I love to use these for a higher time frame swing position. And we're talking 60, 90, 120 days out. One of my favorite things to do is use this for the 401. All right, folks. So today I've taught you about the trendy edges, what they are, how they align with supply and demand, the color of the edges, the acronyms, monthly ME, YE for yearly edge, and WE for weekly edge. Also, most importantly, how we trade them. I hope you enjoyed today's video, and if you have questions, please reach out to me. Welcome to Trendy Options, and thank you so much.